Hello dear traders and welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. On Thursday, weak macroeconomic data from the US subdued a further advance of the US dollar, so the greenback closed the North American trade under pressure. The US dollar index is heading lower towards 96.20 mark after it failed to surpass 96.40. Despite a better than expected ADP National employment report, investors were discouraged with other data on the US labor market. The number of initial jobless claims in the final week of 2018 rose more than the forecast. Besides, the US dollar was weighed down by a dismal manufacturing PMI, which proved a slowdown in the US industry in December. Most investors agree that such downbeat data comes as a fallout from the trade conflict between the US and China. In this context, traders assume the scenario that the Federal Reserve might not increase rates this year and even nudge rates lower in 2020. Amid obvious headwinds in the US economy, yields of the US Treasuries go down, which boosts demand for safe haven assets. The dollar-yen pair is hovering below the level of 108 points. A private Taishin survey from China revealed that the services sector expanded slightly in December, with a PMI uptick to 53.9, better than expected. A report from China invited buyers of the Australian dollar, which is trying to assert its strength today. The Australian versus the US dollar pair surpassed the level of 0.7000 and settled up at 0.7020. Nevertheless, experts do not rule out changes on forex later today. In the second half of the global trading day, the US Labor Department will release non-farm payrolls report. Besides, Fed leader Jerome Powell is due to speak today, so the US dollar could grab a chance to regain losses. And that's all for now. Thank you for watching and see you back soon.